Hello everyone, welcome to my YouTube channel. It's your boy Charles FS. In today's video, we're going to be taking our time to talk about how to apply your trend line and your Fibonacci retracement to as we've established before, the market is either going up or is coming down or is moving sideways, as I've illustrated in the screen. Now, in applying your trend line to your chart, all you need to do is that for an uptrend that is making higher highs and higher lows, all you need to do is to connect the first two outer points, and allow the rest to play out, and allow the market to just do it in and play out in your trend line. The market can either come close and bounces off, or do a perfect retest on your trend line and bounces off, but either way you do not take off your trend line. Now, in the forex market, we know that nobody can tell for certain if the market is going to continue up or is going to continue down. All we just need to do is to have as much confluence in our trading to give us a high probability trade. Now, in addition to your trend line, you can simply add the support and the resistance also. Now, it's okay to trade off a support and resistance, or it's okay to trade off just the trend line, but it's better if you can combine it and at least have enough evidence in your favor telling you that the market is either going your direction or not. Now, for a downward moving market that is making lower lows and lower highs, all you just need to do is to connect the two outer point too, and also allow the market to just play out. After connecting the two outer points, the third touch of the market is where you actually want to trade off from. And like I said previously, you can also combine it with your support and resistance levels. And also the market may not always come and respect the trend line. It might either break below it or break above it, or may not even come and retest it at all. It might just get halfway and continue up or continue down. So that's it for trend lines, guys. As simple as this, guys. You just need to draw it and allow the market to come and confirm it. You don't need to start forcing it and start adjusting it all the time. And when a new trend line is created within that trend line, then you can put up another trend line. We're soon going to be talking about that, and we're going to be seeing it on the live chart where you have a trend line within the major trend line. Now let's talk about the Fibonacci retracement tool. This is the Fibonacci retracement tool. Now you can see that mine has already been addicted. What I have here is just the 50 0.5, which is the 50 retracement, then the 61.8 and the 78.6 retracement too, because I prefer taking trade from a deeper retracement. Now in applying your Fibonacci retracement tool, all you need to do is, for a downward moving market that is making lower lows and lower highs, all you need to do is to take it from the lower high to the lower low. When a lower high is made and a lower low is made, all you need to do is to plot the Fibonacci retracement tool from the lower high to the lower low, and wait for the market to retrace back into your level, your preferred level, of which either maybe this 50. Oh, sorry about that, guys. Which either maybe 50 or 61 or 78.6 before you take your trade. This can be an additional conflict. For me, I use the Fibonacci tool, but I don't really use it like that. I don't apply it all the time, because sometimes it's more easier to just see where the market can either bounces from, or where you expect the market to bounce up from. As simple as that. So also for an upward moving market, all you need to do is to take an upward moving market that is making higher highs and higher lows. All you need to do is to take a Fibonacci tool from a higher low to a higher high, and wait for the market to come down and retest one of the levels before you take your trade. Now, as you can see, these other levels that are above, which is the -27 and the -61.8, are levels where you can take your profit from. The Fibonacci retracement tool, there's a lot of story about it, and you can go out and study more about the Fibonacci retracement tool. It's not a magical tool, but it's just a collection of numbers, and market tends to respect these numbers a lot, which they happen all throughout nature anyway. So that's the story behind the Fibonacci retracement. So, but you can do your in-depth study, of which to me is not really necessary. You just need to know how to apply it. Now, without wasting much time, we're going to go into the live chart and see how this Fibonacci retracement and the trend line have been applied, because of course the market is not always this perfect, doing a perfect higher highs and higher lows, or a perfect lower lows and lower highs. So let's go into a live chart. Now, as you can see, this is a market that is moving up. This is an upward moving market. Now, in establishing the trend line for this market, like I said, for an upward moving market making higher highs and higher lows, all you need to do is to connect the two outer point, which is this, and all you need to do is just to extend it and allow the market to play out. If, for example, you knew where this market was from, when this market made the higher high, broke above this high, you can simply come and draw your, once you know that this higher low has been established, you can simply draw it and just wait for market to come and retest it in the future. It took quite a lot of time before the market came back to retesting, because this is the weekly time frame, but it works, guys. From weekly to the 1 minute trend line works, guys. It works. It's just that one time frame is faster than the other. So also for a downward moving market, and again, one thing I didn't talk about, sorry guys, is that when market want to change structure, when the market break through a trend line without breaking a support or a resistance zone, in this case this support zone, what you can be expecting the market to do is that to come and bounce off this support zone. You should be careful about it. But if the market take out the trend line and take out the support or the resistance zone in that region, or what you are sure of is that this market wants to start going the opposite direction. The same goes for the downtrend, guys. When the market comes back to break the trend line and break the last lower high, what you are sure of is that this market wants to start going the opposite direction. So let's return back to the current live chart. Now, as I was explaining earlier, you have to connect the two outer points. Now, for this market also, for a downward moving market, what you want to do is to connect the two outer points. As you can see here, this market respected this zone but actually broke and closed above it without breaking a resistance zone, but the market rejected from the trend line. This was the second outer point, and the market came again the 10th time to reject from it. So this is just an additional confidence to tell you that the market, there's more possibility of the market going down than it going up. Now, I mentioned something about having a trend line within a trend line. Now, let's take for instance this currently we have this major trend line. As you can see, inside the major trend line, some other trend were actually made before this major trend line was now established, which possibly is this. Okay, let's go down to a lower time frame and really understand what we are talking about. Okay, now having a trend line within a trend line is simply when the market make a mini trend inside a major trend, and you are able to put up your trend line in that zone. You can either put it up like this from the major low to the next outer point, which at a point would have been this. Now, as you can see here, the market made this second touch, of which made this trend line to be established, and market came the 10th time to bounce off it. Now, also take a look at this, guys. Now, this is also a mini trend line within the major trend line, which at the point was this. Once the market break below the trend line but wasn't able to take out the support and resistance and made a new, you can simply now adjust it here. Now, what we are expecting the market to do is to come to this third zone and bounce off it. But once the market broke below, we knew that our next possible zone where the market can also reject from is the major trend line. So that's it for Trendline, guys. Now in drawing your fib on your chart, like I've explained before, is simply just when the market has made a higher high or a higher low. When the market has made a higher high, for example, after the market made this low, then made this high, all you need to do is to connect your Fibonacci and allow the market to play out the way it's going to play out. Now, what we saw here is that after the market, this high was established, the market came down to this 50 retracement zone before bouncing off to make a new high. So as simple as that, you can simply establish your Fibonacci like that. Now, the last thing I want to talk about in using Trendline is something we call a counter trendline. It's called a counter trendline because it's actually placed against the major trend, and we use it mostly for entries. Now, as we saw in the higher time frame, which is the weekly, that this trend is to the upside, but in the lower time frame, we see, which is daily, we see it making lower lows and lower high, lower lows and lower high, lower lows and lower high, which is a bit choppy. But for this market to be traded, for you to avoid all this noise, what you can simply do is to draw your counter trend line, and at a break of it, what you need to do is you can enter your trade here, then put your stop loss below, and allow the market to play out. Or you can simply wait for the break and the retest. In this case, once it broke it, but it was rejecting from this this resistance that is here. So for some traders, what they will do is that at this retest, at this rejection, they are going to take off their trade here. They are going to take their trade. Here, then put their stop loss below structure. But also for some, they may also want to wait for a perfect break and retest, expecting a retest of the trend line before the market actually starts making new highs. So that's it for trend lines and Fibonacci. Now, if you find the video useful, be sure to subscribe and hit the notification bell so you'll be notified when I upload a new video. Thank you so much, and bye for now.